Fears of a growing tussle between tech companies and AI driving the Nasdaq down by 3%. We'll have more on the earnings of those companies. It is that war for AI dominance that has led Samsung to bleed some $122 billion in market value. Meanwhile, we've got the conflict in the Middle East forcing the IMF to slash its regional growth forecasts. Hello, I'm Rashad Salamat with the latest business and finance news, live right here from Istanbul on TRT World. Well, stock indices dropping on Thursday with the Nasdaq Composite falling by 3%, marking its most significant single-day decline in nearly 2 months. The drop is mainly due to a sell-off in major tech stocks like Microsoft and Meta. This volatility reflecting economic uncertainties and high expectations for tech-related issues, which are now facing challenges from AI growth as well as from market signals. Apple's latest quarterly results beating revenue here as well, hitting a record $95 billion. However, profits falling shy due to a more than $10 billion tax charge. iPhone sales were strong, bringing in around about $47 billion, mostly actually from older models. Apple stock dipping some 2% after hours as profit pressures weighed on investors. Now, while US tech giant shares fell, Amazon stock actually up by 6% after hours. The company's earnings per share reaching $1.4, and that was ahead of expectations, with the company reporting $160 billion in net sales. That represents an 11% increase from this time last year. Now, despite these strong results, Amazon did give a lower forecast for the next 3 months. Right, let's indeed get more analysis from Farah Murad, senior market analyst at Equity Group. She joins us now live from Dubai. Thank you so much for joining us, Farah. Well, what are you making about this sort of febrile atmosphere concerning tech, AI, etc., to really at the moment drive things lower for some of these stocks at least? It's becoming quite a worry, is it not?
I mean, it's a thing that we will definitely see in new industries, new techs. We still don't know how we will monetize AI. The infrastructure, the research, the development, they all need time. We need clear time frame. We need the clear plans from big techs to show us that, okay, in midterm, long term, how we will monetize AI, especially with the high competition, high costs, high prices of these stocks as well. I think it's the main issue as well, beyond just AI. That we can discuss it. So even from the previous quarter, I've seen many companies talking about AI, while in their reports, there was no mention of that or how they will implement it. I think investors need more transparency when it comes to AI and cloud as well.
Well, tell me here, how does that all sit with valuations right now? And what valuations look like? Are they attractive? They look a bit toppy, historically at least.
That's the main thing, and that's what I wanted to discuss. Now, me as an investor, if I can move to the debt market, and the debt market, treasury yields, for example, for 10 years, they're giving me above 4%, 4.2. Yesterday also it peaked higher. It's a low risk market. While if I want to compare it for S&P, for example, return as earnings per price, it's around 3.8 given these high prices and high valuation. So why would I jump in right now when I have better alternatives? And this is why I think a correction should happen. And this is what we're seeing yesterday, despite some good reports, because investors should be lured in with lower valuation. So at least a higher risk assets would be more appealing at the moment.
Farah, thank you so much for joining. Farah Murad there, joining us out of Dubai from Equity Group there. Let's just quickly have a look at some of the other stories that we're following for you here as well, with the chipmaker Intel out with a more than $16 billion loss in the third quarter of the year. The company working through a costly turnaround effort in order to try to streamline its operations. The loss is the largest in its 56-year-long history. It exceeded expectations here, so that's no good thing. Revenues for the same period declining some 6% year-on-year, coming in, $13.3 billion. ChatGPT makers OpenAI has launched a search feature within the AI viral chatbot. It positions a high-powered artificial intelligence startup to better compete with search engines such as Google. The search offers up-to-the-minute sports scores, stock quotes, news, weather, and more. The feature is powered by real-time web search and partnerships with news and data providers. That all, of course, coming out of the company. Taking to the skies, or not as it may be, striking Boeing workers will vote on Monday on a new offer with a 38% wage increase over 4 years. The proposal, endorsed by the International Association of Machinists and Aerospace Workers, also includes a $12,000 bonus, as well as improvements to retirement plans. Workers previously rejected 2 offers, including one for a 35% pay rise. All right, let's get back to South Korean electronics company Samsung, losing more than $100 billion in value after failing to meet delivery on chips used in the AI space. The company really struggling to secure a seat in the future of the chip-making industry. Others, meanwhile, are gaining ground, as Emre Boz has the story.
Tiny little chips are made of millions of electrical circuits that store data. And for decades, South Korea's Samsung has been a leading player in their manufacture, along with a host of electrical devices. It's the largest manufacturer of DRAM memory chips used for laptops, securing a massive 43% of market share in the second quarter of this year. And as the growth of artificial intelligence took the chip-making sector by storm, it was expected that they too would ride the profit wave. But for Samsung, the rise of AI has meant the fall of its market cap. In the last 6 months, Samsung stocks fell more than 24%, and since its peak on July 9th, they've dropped by 32%. This is a loss of $122 billion in market value. But why are investors souring from the company? Samsung has said it's struggling to keep up with competition in the production of chips used for training AI. In the third quarter of this year, its semiconductor unit reported earnings of $2.8 billion, down 40% from the previous quarter. Smaller rivals like SK Hynix have taken over Samsung, especially for high-performing AI chips using high bandwidth memory, a technology providing fast data for AI. And Taiwan semiconductor manufacturing has seen its stocks climb more than 40% in the last 6 months. Investors are optimistic as the company continues to gain in outsourced chip making. Samsung has promised to overhaul the organization to cut costs and increase investment in the AI chip space. But things are moving so fast that it may prove too little too late for Samsung. Emre Boz, TRT World.
All right, let's get more on this as we're joined by Inky Cho in Kuala Lumpur. He's a financial market strategist at XNest. Thank you, Inky, for joining us. Well, first of all, in broad brushstrokes, tell us what's going on at Samsung.
Morning. Thanks for having me. It was quite surprising that Korean semiconductor exports hit a record $13.6 billion in September, but Samsung Electronics stock is still having a rough time. And after bouncing back from last year's semiconductor slump, the stock seems to recover a bit early this year, but lately it has plummeted, dropping over 30% in just the last 3 months. And it looks like the semiconductor market and some geopolitical issues are dragging down stock prices, but the bigger concern is really about Samsung itself and its future. And investor confidence is pretty shaky right now, especially since the Wall Street investment bank slashed its target price. And Morgan Stanley lowered Samsung's target price by approximately 27%, saying that there was a significant decrease in demand for DRAM due to reduced smartphone and PC and an oversupply of HBM chip. And plus, reports about Samsung reducing its overseas workforce have also raised a big concern about where the company is heading. And moreover, with the world moving towards an AI-driven economy, market participants are starting to wonder if Samsung can keep up with this kind of fast changes.
So Inky, the question lends itself here. Is it really seen and perceived as being sleeping on the job when it comes to AI? Or is it in part also down to the semiconductor cycle too? When we just look at the chip business, I'm not looking at the smartphone and TV and other arms that it may have.
Okay, Samsung stocks has taken a hit lately, and a big reason for that is the company's slow response to the AI market. And investors are pretty skeptical about Samsung's AI capabilities. And until those doubts get cleared up, it is unlikely that the stock price will bounce back to where it used to be. In addition, Samsung Electronics is really feeling the heat from its competitors lately, and it is taking a toll on its stock prices. And they used to be the top player in the HBM market, which is super important for AI generating, but now they are lagging behind SK Hynix. And over in the foundry space, Taiwan's TSMC is taking further steps and has pulled ahead of Samsung by more than 50 percentage points in the market share. And even in the high-end smartphone area, Samsung shares seems to be shrinking significantly compared to Apple. So in that respect, Samsung would plan to turn things around by choosing and investing in the most profitable product lines. And they are focusing on data centers and aim to boost profit by speeding up the development and mass production of next generation semiconductors like HBM. And plus, they are rolling out of AI features one after another. And Samsung stressed that they want to ramp up chip development and production to boost sales in the fourth quarter and regain market shares from SK Hynix.
Inky, thank you so much for joining us. Inky Cho there, joining us out of Kuala Lumpur. Right, let's have a look at a company which now actually competes with Samsung in the smartphone space. It's Huawei. It unveiled its groundbreaking 5.5G and AI integrated mobile technology at the 2024 Global Mobile Broadband Forum right here in Istanbul. Under the theme, 5.5G leads the era of mobile AI, the meeting brought world industry leaders, tech experts and media together to explore new business models, opportunities emerging from mobile AI. And as one of Turkey's major international tech events this year, the forum showcased a range of innovative applications, smart glasses, intelligent vehicle cockpits, digital human interactions and real-time translation tools, all of course powered by AI. Now, speaking of the event, Huawei's Turkey carrier business CTO Adham Atuntas highlighted how 5.5G and artificial intelligence are set to integrate more deeply into everyday life.
Both 5G and AI will change our social life. For example, in the near future, your homes will be donated with the cameras, with the IoT sensors like in the smart cities. You will have a small smart city in the home, which is called the smart homes as well. And then there will be AI, which has been processing all the data which has been produced from the devices and the IoT sensors. And then it will make a decision according to your mood. Once you come at your home at night, according to your mood, it can play the music based on your mood, or it can change the light atmosphere according to your mood again. For entertainment purpose, also it will change our lives. Now, in the future, you will not further need expensive GPU computers at your home play games. Cloud gaming is a trend. Except for entertainment, there will be a lot of AI-supported wearable devices that will monitor your health. And then you can set alarms or threshold. If there is something happens to your health, it can trigger all of the related institutions to help you on site. So as a summary, both 5G and AI with its technology advantages, it will totally change your life, both at home and both in the business area. It is for sure that 5G will have a positive impact on the industrial sectors, with thanks to its advantages on the high throughput, lower latency, and massive device connection capability as well. For the industrial sectors, especially, we are assuming that the manufacturing sector, healthcare sector, smart transportation sector, and railway sector, energy sector will have a most advantage to get the benefits of the 5G. Because these sectors are mainly rely on the real-time data, processing a lot of real-time data, low latency services, and then a lot of automation. For example, if I want to give an example in the manufacturing industry, normally in the factory, when you go to factory, you will see the robot arms, you will see the auto-guided vehicles, and then you will see the quality control automated systems as well. Once 5G comes, the 5G controlled auto-guided vehicles will have a more availability than the traditional Wi-Fi controlled AGVs. And then the robot arms, because 5G is a cable-free, you can move the robot arms from the one manufacturing line to the other line is very in an efficient way. And for quality control systems, normally in each product line, you have expensive computers to analyze the defects on the products. Now you can move them onto the cloud, because in the factory you will have a high throughput and the low latency systems, and then AI will process the data instead of the computers in the cloud. So that manufacturing industry will be one of the top priority industry for getting benefit of the 5Gs.
Right, still to come on the program, we're going to be heading to Iraq to see how a local government there is spending millions to deal with a severe water shortage. That and more on the way.
The world is facing an existential emergency. A threat to every living being on the only known habitable planet in the universe. The climate crisis is growing and must be confronted. We examine the challenges, the science, and the solutions needed to keep us alive as global temperatures rise. Just 2 degrees on TRT World.
TRTworld.com. Intuitive, inclusive, informative. From the remotest reaches to the teeming metropolises, the world is one click away. TRTworld.com. Whatever it is, it's wherever you are.
The International Monetary Fund has lowered its economic growth projections for the Middle East and North Africa, otherwise known as MENA, pointing to ongoing conflicts, geopolitical uncertainty and oil production cuts. Pinar Nisasta now reports.
The IMF downgraded the growth projection for MENA in 2024 to 2.1%, down from an earlier estimate of 2.7%. The forecast for 2025 is also slightly reduced to 4%. Growing uncertainty due to conflicts and trade issues affects countries differently. The conflict-affected nations need emergency assistance, while Egypt, Jordan and Iraq must prioritize macroeconomic stability. Israel's military actions and Sudan's civil war are expected to create lasting setbacks, with Lebanon's GDP projected to shrink by 9 to 10% in 2024. Forecasts for Lebanon have been suspended due to ongoing escalations. Extended oil production cuts by OPEC+, led by Saudi Arabia and Russia, are dampening growth for oil-reliant economies, contributing to slower growth across the region. Non-oil sector growth in GCC is outperforming overall growth, supported by government-led investments that sustain domestic demand despite lower oil prices. Economic diversification initiatives are making headway, but will take time to yield results, leaving medium-term growth muted. MENA economies face challenges in attracting foreign direct investment and managing high debt, particularly in mid-income nations, which constrains growth. The IMF urges faster structural reforms in governance and labor markets to support medium-term growth. Good news was that inflation was gradually being brought under control across the region. Regional inflation is expected to average 3% in 2024, except in Egypt, Iran and Sudan.
Right, let's move to the vexed issue of inflation, because it hit 2% in the Eurozone in October. All of that according to figures which were released Thursday. This marks a return from the lowest level since April of 2021 and sits within the ECB's target range. It's a key threshold that may impact the European Central Bank's interest rate decision, which is in December. The inflation exceeded economists' expectations, who had projected a 1.9% rise. The ECB anticipated a rise in headline inflation in the year's final months, primarily primarily driven by higher food and energy costs. This increase is largely attributed to the base effect from last year's temporary drop in energy prices. The ECB has reduced rates there, 3 times now this year alone, moving from 4% to 3.25% above 1%. Officials remain divided on the need for an additional 50 basis point cut, although low business activity signals a cut, while the inflation rise makes the decision a bit of a complex one. Market remaining optimistic about a potential 25 basis point cut, though, in December. Let's get more analysis now and get to Francesco Rizzuto, professor at Liverpool Hope University. He joins us now live from Liverpool in Britain. Thank you so much for joining us, Professor. As we can see, inflation is a worry, and perhaps it's being underplayed by some, but it's perhaps evidenced most by the massive gains in gold and silver prices particularly. What are the fundamental problems here in your view, and what needs to be done?
Actually, the figures are not a shock. This was expected. So it's not a question of underplaying it. I think that the projections for the year and into next year are that inflation would have blipped up a little bit in the last couple of months of this year, and then they will stabilize next year. The blip in inflation has actually been driven by an increase in the cost of services, which has essentially food to a certain extent, but services, which has been driven really by an increase in wage costs. Now, if you think about the pressures on wages during the high inflation that we've suffered over the last 18 months to 2 years, you can understand that. But again, that's anticipated. That's not really seen as a major problem. Look, I think the real problem in Europe is not now inflation. The real problem in Europe is relative to the United States, relative to China in particular, is actually our growth rates. And even though people are saying GDP is fine, we're up 0.08%. Are we kidding here? China is depressed because it's only growing at 4.6% this year. The United States, not as much as China, but certainly far more. So the challenge in Europe is how do we control inflation and yet grow relative to others as well as internally?
So, Professor, of course, that is something which is made worse by demand pull inflation as opposed to cost pushes, which we had, of course, a couple of years ago. And that's something which can also take its toll on economic growth as well. Wouldn't you agree?
Oh, absolutely, absolutely. The problem, of course, here is that we're competing, and European companies are competing in what many in Europe are now considering to be a market that's slightly unfair. We only have to take the electrical car sector to see what has happened to companies like Volkswagen, to companies like Fiat, Jeep, Peugeot, and so on, where we're finding it extremely difficult to compete with Chinese imports, to be blunt about it, but we don't have the capacity or the costs that European companies are having to deal with, wage and others. That means that it's extremely difficult for growth to actually happen here.
Professor, great having you on the programme. Thank you so much for joining us there. Francesco Rizzuto, Professor of European Law at Liverpool Hope University. Now, according to the United Nations, Iraq is the 5th most vulnerable country to water scarcity. The water crisis is impacting daily life, especially in northern farming communities. But the Kurdish regional government is leading a multi-million-dollar initiative to try to solve the problem. Reporting from northern Iraq's Duhok province, Obeida Hito sent us this.
This is a drilling site, not for oil, but for water. In the Zakho district of Duhok province, farmers have been struggling to irrigate their land since 2019. The region is facing severe water scarcity caused by climate change, inadequate rainfall, and extreme high temperatures, making the search for water a matter of survival.
Our region has gone through a period of drought just like the rest of Iraq. That's why we are building water collection dams, and at the moment we are drilling a well to serve farmers here. We have to dig wells because there is no water.
But this year, drought is only part of the story. Duhok was hit with severe flash flooding in March, killing at least 2 people in the region and causing extensive damage to large parts of the city downstream.
The Hawk Dam holds 52 million cubic meters of water and is a main source of drinking water and irrigation for farmers, with water flowing from rivers in Turkey and Iran. It also attracts many tourists because of its location between the mountains. It prevents flooding to a certain extent, but several years of droughts and then the unusual torrential rains caused severe flooding. That's why we are building new canals to deal with this issue.
This is the 3rd largest dam in the KRG. It holds a strategic reservoir that is critical to sustaining life in northern Iraq and beyond. The KRG spent more than $500 million in 2023 improving its water infrastructure. Support came from international NGOs and the UN. But Farhad Muhammad, who manages all the dams in Duhok province, says recent developments will help secure Iraq's water needs.
The water agreements between Turkey and Iraq are very important in every aspect. In the past, the Mosul Dam lost a lot of water due to drought and the entire region was affected. But with the new agreements, the water coming from Turkey will pass through Kurdistan on the order of Prime Minister Masroor Barzani. And this should be given special importance because water is life.
The region's water supply is deeply connected to larger geopolitical factors and environmental challenges, both within Iraq and with neighboring countries. With rivers flowing from Turkey and Iran, the KRG relies heavily on cross-border cooperation to manage water resources effectively, making positive diplomatic ties as essential as the infrastructure itself. Obaida Hito, TRT World, Duhok, Iraq.